Good afternoon and welcome to Countdown on Bloomberg Quint Live. Today's session sees some amount of weakness, but we are still managing to defend that 10,900 mark on the index. It's looking weak across the board, even for the broader markets. The mid caps and the small caps lose a little bit more. We'll take you through the internals in just a bit, but let's quickly run you through the headlines for the time being. Markets are in correction mode. The Nifty has slipped below the 10,900 mark. In fact, is just about defending it right now. The Pharma index is the only sectoral gainer. Sun Pharma is the top gainer on the Nifty today. The company said that it will merge its domestic distributor Aditya Medisales with the wholly owned subsidiary. Prabhat Dairy has fallen off the highs of the day after it sold its dairy business to French giant Lactalis for 1,700 crores. And metal stocks are the top losers on the index today, with Tata Steel, JSW Steel are among the top 5 index losers. Good afternoon, Neeraj. So we've taken that break. Now we're seeing some amount of weakness creeping in, and not just the broader market. So now you've got the large caps trying to defend that 10,900 mark on the index.
Yeah, and fallen without the Nifty Bank contributing in a meaningful way. That would be interesting. So 0.5% down for the Nifty, but if you look at the Nifty Bank, that's lying absolutely flat. It's just 40 points, about 0.15%. So the banks haven't done as much damage as some of the others have. Now, just before we get to what has caused the damage, also want to mark the market breadth for today's session and then the market breadth over the last 3 sessions. And you'll see that despite the Nifty holding out or looking like holding out, the broader markets have given way. Today, the market breadth is even more adverse than what was the case yesterday. But 3 days on a trot now, Nifty has kind of stabilized, but the mid caps and the small caps have just come off, and which just shows that this is a 3-day chart. And as you can see, Nifty versus the broader markets, the white line is the Nifty, and there you see there are some gains as well that have come in, but by and large stable with a mild downtick. But look at the mid caps and the small caps, the last 3 days they've just come off. So the broader market certainly under a bit of pain. Dimna will speak about it. Let me just try and bring you up to speed with what's happening in the large cap end of the market. Fair degree of red, very little green. Sun Pharma is up, Kotak Bank is up, but interesting F&O action in Kotak Bank too, we'll talk about that. GAIL, Titan amongst others which are doing okay, and some gains for the oil marketing companies. BP, HP are doing reasonably okay for themselves. What's not doing well? Autos. So M&M is down. There is weakness in Maruti Suzuki, about 1.75% lower. Tata Motors is down about 1%, so that is looking weak, and IT is giving way. Day before yesterday we were talking about how Nifty IT is reaching levels from where it has found resistance, and I reckon today is the day when it's indeed showing that signs of the resistance. So down for a lot of names, including HCL Technologies, including Infosys, Tech Mahindra. So all of these names have come off in the session today. So Nifty IT under a bit of cloud, but mid caps, lots of losers, and I'm guessing a few gainers as well.
Yeah, so you've got to see some earnings reactions that's coming through the day as well, and a few stocks that we've been focusing on since the start of trade. So we'll start off first with what's happening to Prabhat Dairy. Now the stock actually started off 20% higher, post the announcement of it selling its dairy business. But then in the second half of trade, the stock actually plunged 8%. So that's an intraday move of about 28% that you're seeing in the stock. It's come back from there, but it's still down by about 4%. Agam will join us in a bit to take us through what went wrong right now and what exactly lies in it for the shareholders. Shree Cement reported its numbers. Initial spike, the stock has come off, but it's still in the green. A good set of numbers, a solid set of numbers from Shree Cement. EBITDA was at 710 odd crores. TVS Motors also reported a good, strong, sturdy set of numbers, and the stock's up about 3% odd. Other stocks on the move. A Spark, after yesterday's 15-16% gain, sees a follow through in today's session. Into with what Sun Pharma is doing. Sun Pharma is up 5%, Spark's up about 4% odd. Indigo is doing well. Havells too on the back of numbers does well, about 5% odd. Volume buzzers then. You've got Philips Carbon, which is doing okay for itself on the back of closer to about 31 lakh shares that have been traded. On the flip side, you've got a Jindal Steel and Power, which is trading 1.2 crore shares on the downsides, and SAR Technologies. Revenues were good, but disappointing on the margins as well as the profit numbers. The stock trades about 1.4 lakh shares. Near 52-week lows, the stocks that are trading there are Sheila, Foam, Inox, Wind and Groove Finance. These are very precariously close to those 52-week lows, and look about that there could be a possibility of breaking under them if at all you see further weakness coming in. But like we were highlighting, we're talking about Prabhat Dairy. That's going to be in focus. A very large intraday swing on the stock, from being up 20% in the morning to being down 8%, and then from there picking back up to about 4% cuts that we're seeing right now. Agam Vakil is joining in with the calculation of what is in it for the shareholders. Agam.
Devina, the reason we've seen Prabhat Dairy come off and quite substantially too, from, as you mentioned, 20% upper circuit to now down as much as 5%, is that there are way too many uncertainties with respect to this transaction. Now, as we all know, that the company is going to sell its subsidiary Sunfresh Agro, which comprises 98% of its business, well, for 1,700 crores. Now, that is, of course, the big news of the day. But the real question is, one, how is it going to use these funds? And two, if it does use these funds, and when it will, how is it that it's going to make use of them? So going ahead, we know that 98% of the business has been sold. There are three options available to the company: pay back shareholders, invest in other businesses, and that of course is a point of contention, or perhaps a combination of both. Let's talk about investing in other businesses too. Prabhat Dairy had a well-running business, double-digit growth in its revenues, with margins expanding essentially with its focus on business to consumer, and that contribution to the revenues was constantly increasing, and that also led to higher margins. What is it that it's going to do now that could get you a better profile? So it's the question of that opportunity cost right now for Prabhat Dairy. But that said, let's assume that it wants to return this money to shareholders. This deal is at 1,700 crore rupees, and it is going to sell its subsidiary Sunfresh. Now let's understand the cross-holding of Sunfresh, because it is important to know this particular aspect before we move in. Prabhat Dairy owns 100% stake in Cheeseland. Cheeseland owns 71% stake in Sunfresh, and Prabhat Dairy owns the balance 29% directly in Sunfresh. So let's talk about that 29% stake first and take a look at how this particular aspect could turn out for the shareholders. Well, if I do a rough calculation based on 20% capital gains tax, and I haven't really used surcharge or cess for that matter, because I want to keep things simple, that comes to your cash per share for each shareholder to around 17.5 rupees per share. But it is the other aspect. This, of course, comes to about 508 crores out of your 1,700 crores. What about your balanced 1,200 crores? That's the big question, because this one has been held by Cheeseland stake in Sunfresh. So we don't really know, one, how it is going to be able to deploy these funds. It really can't take up dividends, because in that case it's going to have to pay a double DDT, and that will result into a substantial loss. And also, what if the company also uses a lot of these funds to repay its debt, which stands at around 300 crores? In that case, shareholders don't get too much to make anyway. And thirdly, given the fact that it is a indirect subsidiary, how is it that, how else are the ways that it can actually use up the money? Now, we already know that the company is looking to expand into the animal feeds business, but we really don't know anything about that particular profile at this point in time. And these are some of those uncertainties which are working against Prabhat Dairy, the clarity for which has been awaited from the management.
Right, so there's it's a gray area for shareholders at least, and what lies in it for them. Thanks a lot for that, Agam, for putting that in perspective. That's Prabhat Dairy, and the possible reason why the share price has come off the way it has. 88 on the stock price after hitting an intraday high of 111.
Yeah, let's in fact pose those questions and more to Shailendra Kumar. He's Director and CIO of Narnolia Securities, joins us right now on the show. Lots to talk about the markets as well, but since we're on the topic of Prabhat, and I know Narnolia as a house tracks Prabhat very closely, Shailendra, thanks so much for joining in. Just your thoughts. I mean, when this deal got announced and in the morning when the stock was up about 15–18%, did you envisage that the lack of certain clarities could drag the stock down so much? And now that it is trading about 4–5% lower, what would your message be to clients who probably own the stock of Prabhat Dairy?
Yeah. So our analyst had a buy rating before on Prabhat, and today's early morning the jump in the price, the target got met also. Having said that, see, the idea today after the announcement, somebody looking to buy Prabhat is very simple. Now you are not buying a company which is into dairy business, and the business is growing by 20% per annum on a regular basis. Now you are buying a company which is into animal feed. So purely for from an investment perspective, a longer term story, the Prabhat is no longer the kind of company you thought, say, till yesterday evening. The second part, which is mostly debated, like how the capital allocation is going to happen by the management now. This is a very new company as far as the listed space goes, only listing in FY16. So none of us has a very clear thinking about how the capital allocation policy of the management would be. So somebody looking, I mean, this stock for next couple of quarters, say Q1 or Q2, the deal gets done and you have a full clarity. In between, some price movement will happen because of arbitrage opportunity, which will throw it up in terms of, so even after DDT, there will be good amount of cash on the table if the allocation remains strong by the management. So that will keep moving the market. But the idea is very simple. Now, from a long-term perspective, this stock is not a dairy business stock, it's an animal feed business. So the whole dynamics, the way you analyze for a longer-term investment will simply change. So that's very important to understand for investors.
Yeah, but that is from a perspective of somebody who's, probably looking at the business afresh. Somebody's already invested in it and is hoping that, something comes out of this for them with the kind of statements that the management has made that they are going to look to pass on the benefits to shareholders. As per our calculations, that doesn't leave too much on the table for shareholders.
Can you come again?
I'm talking about what is in it for the current shareholders, keeping in mind the price of 1,700 crores that they've got and leaving aside the possibility of all the other payments that they have to actually make, and with the final cash left with them, is there much left for shareholders?
Yeah, so the decline in the price for somebody who is trying to look for some kind of arbitrage gain, still there will be some opportunity in this very short to medium term. But for us, where the purpose of buying the stock was basically betting on a long-term growth story, that is out of the question. So somebody looking like us who is looking for 2-3 year story always to buy, this stock is now off the radar.
Okay, got that. That's on Prabhat Dairy. The stock anyways is down about 5% right now. Another stock that Shailendra tracks very closely is Ashok Leyland. The stock now at its 52-week low, and today as well succumbs to pressure. 3% under, 87, almost 88 on the counter right now. Volumes are also high, so about 23.5 million shares have been traded there. Shailendra, what's your view on Ashok Leyland now?
See, on the margin for sure, Ashok Leyland operating business is deteriorating a little bit. So look at the last 5 years between FY14 and FY18 for the MHCV, which is the higher margin business for commercial vehicle player like Ashok Leyland. So there the volume grew almost double. So from 60,000 number of MHCVs sold in FY14, the number was 1,30,000 in FY18. LCV grew very small, so from 29,000 it grew only to 43,000. So LCV growth was very small, MHCV was growing very rapidly, and MHCV is a higher margin business. Now, for last 1 year, we have seen MHCV growth coming down initially because of axle load and then some NBFC financing issue. So but the growth is coming very strong in LCV, the LCV business. But the problem in LCV is a very competitive market. Mahindra is there, Eicher is there, Maruti has come up with a new model in LCV segment. So this segment, the margin pressure will continue. So from here on, in terms of overall volume, we believe LCV will compensate for the loss of volume in MCV. But because LCV being a low margin business, the profitability will get a dent. Having said that, on a FY 2021 number, you have a company getting sold at 7 times EV to EBITDA. So for us, on decline, it's still a buy. Of course, the kind of growth you saw between, say, 2014 and 18 is a little bit of a past.
Interesting. Would that thought hold true for the auto anchors as well, whether CV-led or otherwise? Do you believe that companies which are trading, for example, a Jamna Auto traded at 100, 105 rupees, now currently languishing at 60. Motherson Sumi, not exactly a CV supplier, but has come off quite rapidly as well. Do you reckon that these auto ancillary companies also would remain under a bit of a cloud for the time being?
See, what I said for Ashok Leyland is very true for, say, Jamna Auto as well, and other auto ancillary name. The valuation correction which has happened in these stocks has happened more than what the fundamental deterioration would be, say, in next 3 years. So cycles surely for a year and a half will be not so good for commercial vehicle as well as passenger vehicle, I think. But the idea is the valuation multiple has got lot compressed, so one can start selectively buying on decline all these names. So I'll not say the business will improve. There is no trigger right now for next 1 year, barring BS6. So whenever BS6 comes, there will be some kind of a volume spurt for sure. But otherwise, there is no trigger. Volume will remain tepid, but the valuation multiple has got compressed to a level from where somebody longer-term investor will find it comfortable.
Your point. So, Shailendra, just what is it that you would advise your clients to do right now? Because there is an overhang of lower growth worldwide. Maybe Indian growth too could come off, and the election year as well. Maybe there are no immediate big triggers for the markets at large. Where do you invest fresh money in? And do you invest fresh money right now, or do you wait for a bit?
See, surely this calendar year 2019, maybe the reward will not be very high, but it's a great year for somebody to selectively build portfolio. I think current level also is not a bad level to enter. Assumingly, you will spread your, say, some pre-election buying and some post-election buying. As far as the pocket goes, look at commercial banking sector. So the ICICI Bank of the world, Axis Bank, or say SBI of the world, they are coming out of a very 4 or 5 year bad cycle. Now, the pre-provisioning profit of these banks, which was growing already in double digits, say 12 to 18%, these names, the provision tapering off will gradually make good amount of changes in the fortune and the valuation multiple of these corporate lenders. So that's one space which I think is a story for the next 3-4 years. Current level, or maybe say 5-10% lower from here, doesn't make much of a difference for a long-term investor. So that's the pocket one can start deploying. Apart from that, look at IT results. After a long time, some pocket of IT, it's a digital, which they calling right now. The growth rate in top line of digital part of the IT business is almost 20%, 30% for other name. Now, this is this is a very good, and for many of these names, the digital now constitute 30 to 50% of their overall revenue. Now, that segment growing at 20%, 30% means some part of the revenue traction has come for IT. Margin has stopped falling. So that pocket again will give you good amount of earning for next 1 year. Apart from bank, commercial bank and IT, you can look for engineering name as well.
Okay, let's talk about one more stock which is in focus, and that is Sun Pharma. That is a stock that has been in the limelight over the last few trading sessions. Today, some clarity coming about from the management leading to the stock doing what it's doing. Some respite there, 5.5% higher, 420 on the counter. Following suit, Sun Pharma Advanced Research also. That's also doing okay for itself after yesterday's big 15% move. 50, or rather 20% move, in fact, Sun Pharma Advanced Research. Shailendra, what would the call be on Sun Pharma in light of the latest developments?
Yeah. So along with IT, between 15 and 17, Pharma also got lot beaten because of business-related issue, margin and working capital increasing in US market. IT surely looks to be getting out of that area. Pharma still is stuck where still there is no growth in terms of top line is concerned. The specialty chemical regime or maybe complex generic will take little time to get through the number for these companies. Sun Pharma has launched 2 drugs lately. One will be next year. Still the top line will not grow 10-12%, will be kind of a growth. Margin, which has fallen for almost say like 31-32%, say 4 or 5 years back, fell to 21%, but now margin is not falling. So business has become deteriorated, but has stopped becoming bad from here on. So there at least a kind of a shape in P&L you will see, or the profit loss account balance sheet you will see in the next say year or two. Now we know for sure the kind of thing that we are talking right now about the compliance and other kind of a legal matter around. Management has become very aggressive now addressing all those issues. They have come very strongly, and they are showing a lot of flexibility in terms of addressing. I am still not sure in terms of legal ramification in the broader sense, but the amount which is being talked right now, even if some provisioning has to happen in the book of Sun Pharma books is strong enough, and the management pedigree of facing a lot of litigation with global pharma major in the last 10 years, 20 years, and a lot of legal things they have already faced in Israel and US, other places. So I have a confidence in terms of management pedigree that they can face this challenging period. Of course, there is no trigger in the immediate sense, But somebody looking for valuation and maybe a contra buy for say 3 years can have still some exposure, can start having some exposure in a name like Sun Pharma as well.
Before we thank you, and we have the next management waiting, but one top idea from your end. You've discussed stocks that we wanted to talk to you about. One top idea from your end.
Okay, so like one name, as I said, corporate lending space, we are thinking will do quite well from here on. One of the large corporate lender of India, ICICI Bank, I think is still the valuation of ICICI Bank is much lower than even comparable other corporate lender in the space, say Axis Bank. So it's trading at a lower valuation than Axis Bank. The yield on advances of ICICI Bank is gradually improving, as well as the cost of fund is gradually, so NIM compression, because of which ICICI Bank valuation multiple got, lower than Axis Bank over last 2.5 years. Because the operating NIM is now improving for ICICI Bank, so gradually this valuation differential also should, narrow down. Books as such looks quite well provisioned, so that's one name for a good outperformance going forward.
Shailendra, maybe you just stay on, and I know we have the management of Srei Infra as well, but we'll just have to go through them in a bit, simply because I'm told that the Asian Paint numbers are out, so just need to address them for a moment. Shailendra, I request you to stay on. Maybe you would have a comment on this. We're just waiting for the numbers to come in. The revenues were seen up 14% at 4886 crores, and the margins were seen about 20%, with the net profit growing to about 619 crores. I'm just waiting for the benchmark numbers to come out and then see how the revenues and the margin profile has looked like. Should be up on the screen any moment. Maybe the street is not too excited because there's an initial downtick on Asian Paints, but we'll just wait for those consolidated numbers to be out before we move any further and talk about these. 1.7% lower now for Asian Paints. The margin picture was expected to be 20%. From what the looks of it, the margins to have missed the numbers a little bit. The net profit was expected to be 619. Even if they've maintained the profitability numbers, which I presume they have from the looks of it, but the margin miss would probably be impacted. 636 crores, I'm told, is the net profit. Quarterly profit at 636 crores. The flashes will come up. We expected about 619 crores, so the bottom line numbers are higher. But maybe there is a bit of a miss on the margin front. I don't quite know. I don't have the handle on the numbers right now. But the stock price reaction suggests that there's something amiss, because the net profit numbers are better than what was estimated.
There was anyways a talk about how the fluctuating crude oil prices have impacted the margins for Asian Paints this time around. But yesterday, though, surprisingly, towards the end of trade, the stock actually managed to close at the high point of the day. But today's session, the volume picture, what exactly would that shape up to be like? Because the estimate was anywhere between 12 to about 15%. Maybe we could wait for the volume numbers as well, because that's the only number we have as of now, which is the profit number. That's at 636 odd crores. So optically, just by that one number, but the stock price reaction is a telltale, so there has to be a miss on one of the other bigger parameters to see how this quarter's numbers have been like. So it most probably looks like the gross margins, which would have been impacted by the cost of raw materials. We'll have to wait and watch what further details we can get out.
Yep, let's wait and watch. Shailendra, Kumar, just before we thank him, any quick thoughts? We have the net profit numbers right now at 636 crores on Asian Paints. Don't quite have the margin numbers as yet with me. But
so
and 5293 crores is the revenue.
So 636 is surely better than what we... 592, okay. Yeah, so 636 is surely a number better than what our analysts were expecting. See, the idea to look for more here is in terms of gross margin. Next 2 quarters, the gross margin will surely improve, because rupee, the crude has fallen and rupee depreciation is almost rested. So these two were, primarily responsible for, some kind of a compression on the margin front. So if I don't know how much of this quarter the margin expansion happened, the number is still not there in my hand. But I think next quarter or 2 quarters, the margin expansion surely will be, coming for Asian Paint. So when the detailed number comes, but I think the result, whatever it comes, the next quarter numbers surely will be better. The only concern for Asian Paint in the commentary I would like to listen to basically is, the auto segment and the industrial segment, there's a volume slowdown. So I don't know what the commentary is there by the management.
I think the decorative side of the business has shown double-digit volume growth, but there continues to remain a pressure on the margin side because of the higher raw material prices.
Interesting. Well, the stock has come back into the green as we speak as well. So maybe that initial trading reaction. I know the management of Srei Infra has been very patient with us. Please excuse us for a moment while we just finish this addressing these index numbers and then come to you. So Mr. Kanoria, just stay on for one more minute, please. But the numbers look reasonably okay from what was anticipated. 636 crores is better. The revenue numbers seem better. The margin numbers maybe a slight miss, but you don't really punish a stock too much because of a 20 bips miss. If there is a miss compared to what was estimated, that's hardly a reason. It's looking to be an interesting quarter, and as Shailendra Kumar said, maybe next quarter will actually be a better quarter as well. On that note, Shailendra, thank you so much for joining in today. Really appreciate you taking this time and staying with us through the Asian Paint numbers as well.
Thank you.
That's the view from Narnolia Securities with on specific stocks and the Asian Paint numbers as well. Stock lying absolutely flat. We'll wait for the volume growth numbers to come out. As Devina said, the decorative paint segment seems to have done okay on the volumes front. We'll wait overall the segmentation to come in and then try and figure out and give a final verdict. As we speak though, the numbers, or rather, let's focus on one more company, and that is Srei Infrastructure Finance. The company on Monday decided to demerge its equipment finance business and also facilitate the separate listing of the same. The demerge is like to infuse another 500 crore rupees into the company's equipment financing business. Also, a lot of talk about IL&FS and what's happening with some of the step-down subsidiaries of ITNL and what could happen to repayments thereof. All of these details with Mr. Hemant Kanoria, the CMD of Srei Infra, joins us right now on the show. Good having you, Mr. Kanoria. Thanks so much for joining in. Just before I talk about the demerger, one quick update on, whatever sense you would have and the outlook thereof on what will materialize out of the IL&FS repayments, because the market and a lot of mutual fund unit holders are pretty nervous about what could happen to NAVs, for example, if the markdowns are considerable, because some of those on at least the ITNL subsidiaries were not marked down earlier. Any thoughts that you have on this before we get to the demerger, sir?
So I think that, I think that IL&FS, this entire issue of the IL&FS, that the shareholders basically supporting the company, that itself is wrong, because I think that the first thing which should have been done is that the shareholders coming forward to support the company. In any event, any company which has a problem, and if you have shareholders, they have to come to support them. So I think that itself should have been done. But nevertheless, in the wisdom, the government decided that would not be appropriate, so they have not done that. So each of the subsidiaries of IL&FS, because the lenders who have lent to those subsidiaries, they have evaluated the balance sheet of those companies and lent. So therefore, taking a general call saying that any of the subsidiaries, whatever payments that they have to make to the lenders or to the creditors, they cannot do that, is again not in conformity to the Companies Act. So I think that, any company which is formed, we have to keep in mind that the sanctity of the law should be kept intact, because if that is disturbed, then it causes a pandemonium. So today there is absolutely a pandemonium. IL&FS as the holding company, there are issues in that. So that can be addressed. The lenders to the holding company may be in a position to get the money as and when the subsidiaries are sold off, or whatever advances that they have given to the companies, various companies are realized. But the subsidiaries where lenders have lent the money, and if those companies are basically doing well, or they have the capability to repay and meet their liabilities, they should be allowed to do that, and it should be done. So keeping a full freeze, and that no company can pay off anything to the lenders, whereas whatever realization that IL&FS and their companies have to do from the market or from the persons whom they have lent or given any advance and all, that they can go all out and do it. So I think that it is not a fair way that the whole thing is proceeding, and it has created a big pandemonium in the market. And I think that we should do whatever is to be done within the framework of law and the Companies Act, IBC code, etc., which has come out. And there are so many regulations in the country, so those regulations should be followed. Otherwise, it is really disturbing the way the things are going on.
All right. Mr. Kanoria, coming to the demerger of the equipment finance business, could you throw some more light on it with regards to, what is the process going to be like? When do we see, the final listing of the business?
So basically what we have announced yesterday, and the board has decided that we were contemplating to get Srei Equipment Finance listed, but because of the market situation and the general negativity which is existing in the market about both IPOs and NBFCs in particular, so we thought that it would not be appropriate to do that. But at the same time, Srei Equipment Finance has developed well as a business, as a company, and we felt that it was appropriate that Srei Equipment Finance also gets listed. And that is the reason why the board decided that the shareholders of Srei Infra will get the shares of Srei Equipment, and by virtue of that, the Srei Equipment will get listed. So now there will be two listed entities, and they can both raise their capital, and whatever money they need for their growth can be done independently, instead of Srei Equipment depending upon Srei Infra to raise money and then infuse in the company. So I think that this will be the big advantage. So therefore, going forward, what will happen is that immediately the shareholders of Srei also get benefited because they have another company shares which will get listed. So they will have a chance of monetizing their investments and hold it in both the companies, or monetize in one company, or grow their holdings. So they will have various options available to them. And from the company's perspective, both the companies independently would be in a position to run and raise capital for their growth requirements.
To start off with, for Srei Equipment, what kind of fund infusion are we looking at with this demerger?
Immediately, so it can be once the company gets listed, then it will have an opportunity to keep on raising money as and when it requires. So it doesn't have to raise money at one shot and keep it idle. So therefore, immediately we see that about up to 500 crore would be required. So they will raise about 500 crore. Then again, with their growth plans, if they need any further funding, they can keep on raising funds. And so they can also maintain and keep their ROEs intact.
Right. And what would you, project in terms of what kind of growth you're anticipating from this new spun-off business?
See, I think that the growth will, basically both the companies have been on the growth path from the perspective of their profitability. So that will continue to happen. And only from the perspective of growing their businesses also, now when they are independent, they will be able to access the markets directly. So therefore, growth plans are intact. There is no change in the growth plans, and we are on track where the growth plans are concerned. So it's only that, they get, both the companies will have the capability of accessing the market directly instead of depending upon the parent, the subsidiary.
So when you're talking about accessing the market for funding, if Srei Infra raises funds, under Srei Infra, will that, in a way, I'm talking about the kind of rating that you would give to Srei Equipment Finance, will that be separate, or that will be pretty much in line with what Srei Infra does in terms of the rates that it gets for raising funds?
So it will be two separate companies. So therefore, let us suppose if Srei Infra is raising funds, people look at it from the perspective of their business model, which is more into medium to long-term funding, wherein the equipment financing business, it is more of medium-term, short-term to medium-term, backed by equipments, which we describe in our terms as fast-moving infrastructure goods. So therefore, the repayments are much faster. So therefore, there are two different businesses with two different business models, though in the same sector of infrastructure.
So basically, one will not be affected by the other's ratings, in short. All right, Mr. Kanoria, thanks very much for joining us. Really appreciate you taking out the time and explaining the demerger to us. That is the management of Srei Infra. They have given a go-ahead to demerge Srei Equipment Finance from Srei Infra. They'll be looking at a listing shortly as well. The stock, though, is down 5.5%.
Well, the market's down about 0.5% as well. Let's get in our technical experts now to try and talk about how to approach trade. Amar Singh of Angel Broking with us on the show, as is Sacchitanand Uttekar of Tradebulls. Gentlemen, both of you, good afternoon. Thanks for joining in. Amar, what's your approach to the index today? 0.5% lower, Nifty Bank still, though not cracking as much. What's the trade you would initiate?
I would say that looking at the way the index has bounced back from the lows, and also technically if you look at the charts on the Nifty, in particular Nifty continues to remain positive and strong. If I compare it with Bank Nifty on the daily charts, it is now Nifty which is stronger. So we are seeing some pullback here, but again on the upside, Nifty seems to be technically capped around the 11,000 mark, because if you look, yesterday's high was 10,987, so clearly reflecting that the trend remains positive, but higher levels would meet with selling pressure. But yes, on the downside, any correction can be used as a buying opportunity. So Nifty futures, one can definitely look at around 10,880, 890. That can be a good level to buy, with the stop loss at 10,830 and a target of 10,975 on the upside. So that's one trade one can look at.
Interesting. Sacchitanand, what about you?
Well, we clearly maintain a bullish bias. In fact, there's a big debate going on whether the markets have broken out from the consolidation or no. So if you look at the pattern formation, the markets were oscillating within a triangular formation, and we saw a breakout, I think, in the last during the last week on last Tuesday itself, and from them, it has maintained its structure well. So I think it's a very good opportunity wherein the markets are stabilizing right now. We have seen a good amount of correction, and if you look at Nifty Bank per se, it has been consolidating for almost 4 trading sessions. So I think this is a good time wherein Nifty Bank can be utilized. We expect that this particular move can extend right up to say 27,700 in the coming week. So with that expectation, a stop loss should be placed somewhere close to 27,310 on a closing basis, and longs can be considered now in Bank Nifty. We expect the banking stocks to again take it from here, and the leadership would be again evident in some of the banking and financials.
All right. Let's take some individual stock calls as well this afternoon. Amar, let's start off with your calls.
Yeah, the first one to look at is Siemens. What we're seeing in Siemens is that technically the stock continues to trade positive, and it's around 1,055 levels. And if I look at the charts on a daily basis, we've seen the stock consolidating, and almost 1,080 on the upside and towards 1,030 on the downside. And today the stock is up marginally by almost 1% and almost touching its oversold zone. On the weekly charts and the long-term charts, the stock, I would say, is moving from oversold territory on the long-term, that is the monthly charts. Weekly charts, it continues to remain positive. So this is one stock one can look at. So any dip towards 1,045, 1,050 can be used as a buying opportunity in Siemens, with a stop loss of 1,029 and a target of 1,089 on the upside. And the second stock to look at is BPCL. This is one stock which is I would say trading positive. It did correct to 330 levels, currently around 355 on the daily charts. The stock continues to trend positive. Even on the weekly charts, I would say the trend remains positive for this stock. And on the long-term charts, it has moved from oversold territory. So there is a possibility that the stock could rally higher towards 369 odd levels. So any pullback towards 351, 353, ideally that can be used as a buying opportunity with a stop loss of 344 and a target of 369 on the upside.
Okay. Sacchitanand, what about you?
Well, I have two buying ideas and one on the short side. On the buying side, we have Bajaj Finance. So if you look at the overall structure, the stock has been oscillating within an upward sloping channel since November. Yesterday we saw it again rebounding from the channel support, and the upper end is placed somewhere close to 2740, 2760 zone. So with that intention, playing purely on momentum basis, 2580 should be the stop loss for the trade. The target is placed somewhere close to 2730. The second buy call is on Indiabulls Housing Finance. a very similar structure wherein the stock has been consolidating within the range. 860 has been a hurdle for the stock, and on the lower side 780, 790 has been a decent support for the stock. So it is placed at the lower end of the range. That's why we would like to reinitiate some long positions here, keeping a stop loss somewhere close to 780, and we are expecting a rebound back to 860 soon. And the third call is a sell call on CEAT Limited. So if you look at the overall structure, the stock has been sloping down, forming a lower top low bottom formation. 1200 has been a very significant support, and we saw that particular support being retested. If you look at the OI data, there are clearly shorts which are getting built up. So we expect that this particular move can extend right up to 1175. So shorts can be deployed on futures. The stop loss for the trade should be placed at around 1226 for fresh short positions for a target for around 1175.
Okay. Well, let's get started with some fundamental chat. We already discussed Prabhat and others with our guests about 15 to 20 minutes ago, but there's a bunch of companies in and around which are reacting very strong. Avinash Gorakshakar joins in with his thoughts on a lot of those. Avinash, good afternoon. Thanks so much for joining in. Good having you again, of course. Let's start off with the index movers. Now, while Sun Pharma takes the cake when it comes to the big movers, I think the one that's consistently done well the last 3 or 4 sessions has to be Kotak Bank, now closing into 1,300 bucks. Yeah. Is it prudent to take some money off the table because of the valuation stretch and the valuations at which some of the other peers are available?
My guess is, I think, Neeraj, the numbers which he came out were pretty, good. In fact, much better than what the street expected, especially on the asset quality side. And both the loan book growth and the disbursement numbers which came in also showed a strong growth trajectory. Our sense is that typically, I think the fee-based business as well as the security business was one part of the overall piece which the markets did not like, and where the growth momentum was slightly slower. But otherwise, I take your point that the stock has risen quite fast and possibly could see a little bit of profit booking. Nevertheless, our sense is that not only the fourth quarter, but even the financial year FY20 should be a lot better. So I think this is a stock which should be at least acquired on every decline. I would not be surprised that after a small dip, the stock could again resume its upward trajectory. So overall, a pretty decent set of numbers, and I would believe that this would definitely be sustained in the fourth quarter as well.
Okay. That's the word on Kotak Bank. The one which lost its mojo a bit, Avinash, is Zee Entertainment. I'm starting with the large caps and more on the mid caps in a bit, but 420 yet again, after showing a brief spark of a few days of an uninterrupted up move, Zee has given way completely after the numbers. Yeah. It's just been very, very lukewarm.
I would believe that, I think markets are probably looking at the bigger trigger that how the management intends to offload its 50% stake to a strategic investor. I think nothing on that count was mentioned. But overall, I think the numbers, Neeraj, were quite strong. In fact, both the ad revenue growth and the subscription growth in this quarter was very strong. The international business also did well. So I would believe that, this is one main trigger which the market is clearly awaiting. And hopefully once this materializes and fructifies into something meaningful, one could see definitely a bigger re-rating here depending on what strategic partner comes in and what's the kind of value addition this partner brings on the table.
Okay. Yeah, I know all the conversations of late, and rightly so, I'm not saying in a wrong way, but rightly so, end around what happens to Zee now and the partner that comes into that company. And I think any meaningful call on what happens will be taken only post that. In a bit, Yatin Mota will be here with us to talk about TVS Motors, or do we have him? Okay, we do. Okay, so let's get Yatin in to get his opinion on what he made of TVS Motors numbers, because the stock, which is down about 2.5%, currently about a couple of percentage points higher. Yatin, I stand corrected, about 1% higher. Yatin, what went right with the quarter, what didn't?
Neeraj, this time the results are more or less in line with the street expectations. What worked in the company's favor is that the realizations for TVS Motors have been quite good on a sequential basis. If you look at the realizations, they have improved by nearly 3% on a quarter-on-quarter basis, which have come in at almost 47,127 rupees per unit. More importantly, the operating performance was also quite satisfactory. They delivered margin figure of close to 8.1% versus the street expectations of close to 7.9%. So 20 basis points improvement coming in, and the management does expect the next quarter, which is Q4, to be much better than Q3. Of course, Q3 had higher discounting, pricing pressures were there, raw material costs were up, and probably Q4 looks decent. Of course, the company has launched a couple of new products which are doing well in the marketplace, and that is clearly seen in the performance as well, wherein the overall two-wheeler business grew by nearly 19%. Two-wheeler sales in the scooter segment grew by 32%. So clearly they dominate, the two-wheeler market when it comes to the growth versus the industry. And the management does look at growing much better than the industry, average performance. So that was the key takeaway from the press conference. But clearly it has been inline kind of a quarter for TVS Motor. However, the management has given a robust outlook for the coming quarters in terms of the sales performance.
Okay, got that. That's TVS Motors for you. The stock reacting positively post the numbers. Avinash, what did you make out of this?
No, I think on all parameters, I think TVS Motors has delivered a very strong set of numbers, especially the operational beat has been pretty good. In terms of volume growth, the three-wheeler as well as the two-wheeler volume growth has also been quite strong. And I think the company has managed to maintain its cost pretty admirably. So obviously, EBITDA margins have moved a tad higher. Our sense is that despite the fact that this being a very challenging quarter for the automobile market, where most of the manufacturers were offering discounts, I think we could see a little bit of uptake on the TVS average realization number. I think probably the fourth quarter is also going to be a very strong quarter, which traditionally is supposed to be a kind of a peak quarter for most of the automobile and two-wheeler companies. So I think clearly from these levels, one could see a further bump up in terms of in terms of the stock price. But overall, I think FY20 looks a lot better with several more two-wheeler launches lined up, and I think that could possibly further propel and sustain the kind of volume growth they have recorded till now.
Okay, I just want to pull up Prabhat Dairy again, Neeraj. The stock is down, I think, 14.5%. And when we spoke about it, it was somewhere closer to 88. And it just washed out completely. So actually, an intraday move of 35% from the start of the session to now. And like Agam was highlighting, I mean, probably it's sort of sinking in now that from a shareholder point of view, there's really nothing much that's left on the table. I mean, as per our calculation on the hypothesis that we've maintained, 17 rupees per share, cash per share, the 17 rupees, that's about it that's left on the table.
Yeah, so that is part one. And, let's even if we give the benefit of doubt that the analysis may not be completely correct because it's based on certain hypotheses, I think what is also amiss is the fact that there has been no communication from the management. It's been almost a day's trade. You've entered into such a large deal. I don't know if they've done any kind of conference call, because none of our checks suggested with any brokerage or otherwise that there has been a conference call that has been done.
And what is the way forward? Because once this business goes out, I mean, you got that valuation.
The nutraceutical business. But the point being, what do they do with the cash that comes in? How much of cash comes in? Sajid's analysis suggested that if the money has to be transferred from the subsidiary to the parent and from the parent to the shareholders,
dividend distribution tax,
there are 2 times that the DDT will be applicable, so that takes away lion's share too. And so
paying off debt, but that again, whether they pay off debt with that money remains to be seen, because
it's a slump sale.
So that probably gets passed on with the entire
liability. It's just the lack of clarity, Devin, I would presume. At some point of time, the management should have come in to us or anybody else and given some bit of clarification about just a few questions that remain unanswered. Hopefully they'll do it in a few hours or a few days, but I would have hoped that they would have come in immediately and tried and spoken about what happens next when you've entered into arguably the largest deal. This is bigger than the IPO, right? Because the IPO was a fraction of the promoter shareholding going out. This is the entire business being sold off, and there's not a single word from the management. I think that is a bit disappointing.
Yeah, and when you're talking about focusing more on the animal feed and animal genetics, I mean, that's really, how big a business is that going to be? How big growth opportunity is that going to be? Because, I mean, your shareholders have been your shareholders looking at your business model, looking at the
dairy business.
The dairy business. And now that that's not there, are they just going to be holders of business in the animals feed segment?
Well,
and
no choice, right?
Yeah, yeah. And so how big is that business is the question. And what is the growth outlook there? What is the longevity of that business? So, I mean, a lot of questions remain unanswered, and that's the grey area there.
Avinash, on the money that comes into the shareholder, any thoughts that you have? Our calculations suggested some numbers which weren't the prettiest.
No, in fact, Neeraj, more than that, I think everybody is having a big question as to if 98% of the business is sold, what do they do with the cash? Unless they return the cash in terms of a big bumper dividend back to the shareholders, that would mean some sort of a kind of a soothing thing to the shareholders.
But Avinash, even if they do that, the fact that they'll have to transfer the dividend money from the subsidiary to the parent,
that would imply a double taxation. So that itself is negative. But more importantly, a deal of this size should have actually been made more, communicated friendly, rather than going with this asset sell-off. My sense is they should have made an open offer. So, at least that would have given a decent chance for shareholders to participate. This is something which possibly this deal will not attract an open offer because it's an asset sale.
It's an asset sale.
It's an asset sale. So that itself is a negative surprise because clearly, I may not like the business to be sold. There are some institutional funds like Sundaram Mutual Funds has a stake here. I think, every shareholder has a view and a valid view to actually question the deal. And as you rightly said, there was no indication from the management, no management con call, so no indication. And suddenly out of the blue, this deal was announced. So obviously, later on when the deal's contours were actually analyzed, I think the stock definitely gave all the gains what we saw in the early morning trade.
I think the initial excitement just came about with the size of the deal. Yeah, that just hit you in the face, and you were like, that's a big number.
Yeah.
So I think that's what the initial excitement was. But if you look through the eyeglass, you'll probably see
nothing confirmed as yet, but we have no confirmation from the management. I think that's probably a point to review as well. The stock trading at the lowest point of the day today, 80.30. Not a pretty sight. Anyways, lots more. The metal stocks aren't doing too well either. Vedanta, Tata Steel, JSW Steel all looking weak. Amar, you want to come in on this one? I don't know if you've already given a call on some of the metal names, but if not, any of the top 3 index stocks that you would look to trade?
Yeah, I would say that Tata Steel continues to trade bearish, and it has breached its support earlier. 465, 466 was a crucial support, so that has been taken out, and it continues to trade lower. So any pullback, not at these levels, but any pullback in the stock towards 465, 470, that can be a good level to short with a stop loss above 480 and a target of 440 on the downside.
What also is correcting today, aside of Vakrangi, which is down 5%, is Deepak Fertilizers, Zensar Tech, who we spoke to in the morning, and Praj Industries.
Vakrangi is a really interesting chart. If you see the candlestick moves, it's just like a step. You see that there's no intraday move on the stock. It just opens flat out on upper circuit. You'll just see a step. Yeah, I mean, this obviously won't give you a clear picture, but if you look at the graph, you look at the candlestick, the moves thereabouts, there's no entry point, and and once it starts rolling down, there's no exit point. So that's probably what it's going to look like. There's no real body to trade on this particular stock.
It looks certainly wobbly, so that is weak. And a bunch of others, as I said, the likes of Praj Industries, Deepak Fertilizers, Zensar Tech, etc. are all weak. Avinash, do you track mid-cap IT closely? Did you have a chance to look at Zensar Tech numbers? The margins were a bit off. The management,
which company?
Zensar Tech. Zensar
no,
Technologies?
I don't track.
You wouldn't track it. Okay. Any thoughts on Praj Industries? That's the other one after having a rocking move the previous few weeks. It's just come off a bit from those 157, 160 levels.
No, I think it seems a little bit of profit booking, Neeraj, but I think clearly the bigger trigger for Praj would be the kind of opportunity, the ethanol market throws up, because clearly most of the analysts and the markets are expecting that company would definitely benefit from increased ethanol production. And I think as the deadline for, increasing the ethanol blend with the fuel, is approaching, our sense is that, this is just the beginning. Possibly if this works works out well, then that could be some more kind of incremental business for Praj. Clearly, I think in terms of the economics, I think ethanol definitely seems to be a very solid kind of a sustainable bet, in fuel blending. So I think to a large extent, the stock did go up very fast, but I think this seems to be a profit booking move, and I think probably at these levels, the stock should stabilize. I think unless and until we don't hear any fresh commentary on the fresh order book or on the ethanol story from the Praj management, I think the markets would be keenly awaiting to know what kind of material impact, this industry development now makes on its numbers going forward.
Sacchitanand, the stock, and I'll stick with Praj, it started its up move mid-December. Since then, almost on a daily basis, you've seen the stock climb leaps and bounds, made a high of somewhere closer to 164, and then from there, now we're probably, like Avinash said, in some correction mode. Would this take it down back to those levels of 115, 116, or do you see this fading off?
I think, in fact, one thing which has to be noticed is that after 9 years of consolidation, we have seen a breakout above 120, and that particular breakout was quite sustainable. We've already seen one leg of the rally first and now a pullback. So I think overall the structure of this particular stock has, in fact, changed a lot. In fact, it has been a buy on declines kind of a candidate, and I think this opportunity that we are getting right now, somewhere close to around 130, 132, looks like a very decent one. So probably, the breakout zone was somewhere close to 123. So any further declines should be a very good opportunity. Overall, I think it is just a matter of time and consolidation from here on, which is required. So probably, this is definitely a stock which can be accumulated from here on. A stop loss from a trading perspective should be placed somewhere close to 118 on a closing basis, 123 being the breakout level of this particular stock. Anywhere closer to that should be a good level to enter. On the higher side, yes, after a decent consolidation, we may see 160 levels again getting revisited. So I think it's a very good candidate. The decline is a good opportunity to accumulate.
Okay, gentlemen, stay on. So much more to talk about. We'll take a break on that note. On the other side of the break, of course, we continue our conversations with our experts. 0.5% lower, as we said, or actually over 0.5% lower for a bunch of these names. We'll come back, taking a final thought from Avinash Gorakshakar on a stock that you can buy. Then talk about the Fab 4 stocks of the day. At 3:15, we'll get you what dealing groups are recommending in the session today, and then closing strategies at 3:20. Stay tuned to Bloomberg Quint Live.
One way to do that is to collect and celebrate the life lessons of those people.
Deepak Ramola, the man behind Project Fuel.
FUEL stands for Forward the Understanding of Every Life Lesson.
His audacious mission is to immortalize the wisdom of as many people as possible.
One thing I was absolutely sure about, I don't want it to be a quote on the wall. I want people to experience. So the experiential part is where we use different tools and mechanisms to create one act, and the act is of making lives count.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
back with Countdown right here on Bloomberg Quint. About 30 minutes left for the markets to shut shop. By the way, keep in mind Titan Company, I think it's perked up a little bit, 982. Now is the second best performing stock on the index, trading in or around the highest point of the day. So do watch out for that one. That's one performing stock in the session today. At the broader end of the spectrum, Sacchitanand, a set of others, is doing very well. 7% higher for that one. Havells, after the numbers, up 5%. You track Havells, and if you do, what did you make of the numbers?
Which numbers?
Havells.
Yeah. No, I think Havells numbers were definitely good enough. In terms of the operational performance, I think operating margins were slightly weak. But overall, I think both the top line and the profitability was definitely good enough. I think the clear focus of the business has been on the Lloyd's business. And I think that is something which possibly we could see a better kind of run rate probably from the first quarter of FY20, considering the fact that this season was not a good season. But otherwise, I would believe that the AC markets and the AC product profile which Havells has actually acquired from Lloyd's is definitely going to pick up in the coming year. So I think overall a pretty decent set of numbers, but on the operating profitability side, the margins were slightly a tad below what the street expected.
Okay. Avinash, we'll let it be on that note. Thanks so much for joining in and giving us your perspective. Appreciate your views on a bunch of other names, including Prabhat Dairy as well, which is arguably turned out to be the stock of the day. Let's find out what made it to Yash Upadhyay's list of the Fab4 stocks of the day, though. He joins in right now. Yash, good afternoon.
Good afternoon, Neeraj. I'll start with Havells, and that one's up about 4.5–5% after reporting a good set of numbers. Revenues are up 28% on a year-on-year basis, coming in at close to 2,600 crore rupees. Margins, however, have come off by about 160 basis points. Net profit on a year-on-year basis is largely flat at about 198 crore rupees, but that is on account of an exceptional gain of 21 crores in the same quarter last year. So all in all, a good set of numbers for Havells. Maharashtra Seamless is up also about 2% at this point in time, after the company said that it has received the NCLT approval for its resolution proposal to acquire United Seamless, and that one's in focus. Kotak Mahindra Bank came out with a good set of numbers, earning it an upgrade from Macquarie. So they've maintained the buy rating on the stock, but have hiked the target price to 1,450 rupees, which at the current price of 1293 is a potential upside of close to 12%. And the last stock I want to highlight is Sacchitanand. That one's up about 6.5% with high open interest build-up of more than 10%.
Okay, thanks a lot for that, Yash. Dipan Mehta here with his thoughts as well. Dipan, good having you. Thanks much for joining in. Do you reckon that this is a good time to just sit on the sidelines? I remember the last conversation that we had, wherein I believe you were of that opinion. Does that still continue, as we've seen about the first 10–15 days of the earnings season already?
See, I think one has to follow a stock-specific strategy at this point of time. We're going to be in the thick of especially management commentary and earnings from companies. And depending upon what the numbers are and what the management has to speak about their performance and outlook, one needs to make suitable changes to your portfolio, get into stocks which have outperformed, where the management commentary is positive, where certain scenarios have changed for the better, and exit out of stocks where there are problem situations or growth has come off. So I think this is the period, the earnings period is the best time to have a good strong look at your portfolio, the stocks you are holding, and take a call whether you want to buy more or hold it or sell it off. So that's what we are doing, and that's what we would advise our clients and investors to do so at this point of time.
Interesting. Dipan, a bunch of companies which are in news, there is a bit of a life in the pharma space after Sun Pharma's announcements today. A clutch of other names too have inched up very, very strongly. What did you make of this whole to and fro around this group? I mean, the decimation on Thursday and Friday, and the bit of a resurrection that we're seeing in today's session.
See, pharma has underperformed last 2–3 years or so, and certainly they could have a trading bounce this quarter or next quarter. But we are not convinced of the long-term fundamentals of the industry. There's a high degree of commoditization which has taken place. There's intense competition in all the markets that they are present in, most of the pharma companies, and at least the listed ones, with the exception of, say, a Biocon, There are hardly any pharma companies which have very strong IP and specialized products which can make a difference and provide sustained growth. So our advice would be to remain underweight on the pharma sector. To an extent, if you still want to buy the sector, then we would go for the contract manufacturing companies where there is a more steady business outlook because of tie-ups, manufacturing tie-ups with the global pharma companies and innovator companies. So stocks such as Divi's Lab, Jubilant Life, Dishman are stocks in the pharma industry which could do well going forward. At least I think they would outperform the pharma industry per se and be more or less like market performers, and not to mention Biocon, which perhaps is in a league of its own, considering the kind of development work it has done on the biosimilar side.
Dipan and our technical experts, please stay on. Remember, it's Davos, and let's head across now to Davos, where Mehta is speaking to Fatih Birol, the Executive Director of the IEA.
2018 was a roller coaster ride when it came to crude oil prices. What is 2019 going to bring? Both the demand supply situation, the geopolitical situation, and of course what this means for the broader energy markets. I have with me the world's, amongst the world's best known experts on this, Dr. Fatih Birol of the IEA. Dr. Birol, thank you so much for speaking to us here at Bloomberg Queen. What a year 2018 turned out to be for crude prices. I think there were so many days in 2018 where we saw prices swing by between 5% to 8%. Is 2019 going to bring that kind of volatility?
I think as we discussed last year, I said the name of the game is volatility, and now we are seeing prices are very volatile, but it has major implications for the economies around the world. For example, when the prices sky to $86, it was a major problem for many oil importing countries such as India. It is bad for the consumers, for the prices for diesel, gasoline, LPG and whatever.
And for political parties.
And for everybody. And I should tell you that when it was $86, me and several international figures put their weight behind it and tried to convince the producers to bring more oil to the markets. And then the prices went down, and I should commend Minister Pradhan here. He joined me and others to move the producers in a responsible way to bring more oil and comfort markets. Looking at 2019, I expected there will be still volatility, but once again, I believe a lot of oil will come from United States. If anybody thinks that the shale oil and it is impact, we have already seen the full impact, he or she is making a big mistake. It is yet to come. More oil will come from United States, will comfort markets. I do expect still a volatile market, but if there are no major geopolitical tensions, I wouldn't expect very high prices, which would be a bad news for the consumers, countries such as India, China, Indonesia and others.
So you're expecting prices to stay capped between the $60 to $80 a barrel range, or maybe even lower, 50 to 70?
I think today, since some time we see $60, it seems to be a floor price level for many. And with the global economy slowing down, there is no reason. If the producers behave responsibly, we go back to the very high price levels. So therefore, it's a good news, I guess, for India and others.
You made a mention of the U.S. In 2018, the United States became a net exporter of energy for the first time in over 2 decades. In November, December last year, we also heard of the OPEC announcing another production cut. How do the supply dynamics add up for you this year? Will producers do their best to keep prices in the 60 to 80 range, or do you expect volatility on the lower end of prices if the U.S. keeps pumping up production?
U.S. will pump production, definitely. Only last year, U.S. production increased 2 million barrels per day, one Mexico in 1 year. So it's a big increase. Or we talk about Iran a lot. Here, Iran is a very important oil producing country. Only one field, Permian field in the United States today, produces oil as much as Iran, entire Iran total production today. So, and there was one major problem in the United States. The pipeline capacity was not enough to bring the oil to the refineries, to the terminals. And as of 2019, there will be a huge amount of new pipeline capacity will be coming. So US oil will be able to react to the international price developments much faster and much bolder terms. So on one hand, this US, on the other hand, the many producing countries would like to keep the price as high as possible for their economy. I see a lot of volatility this year as well, but the traditional producers need to take into account US production reaction very, very carefully.
You know, it's interesting you brought that up. For the last several decades now, Dr. Birol, we've come to understand the politics of the OPEC. But do we fully understand how the US will respond to geopolitical changes and how they will maybe leverage their position today in the energy market to make things work in their favor or in the favor of their allies? What are the politics of the US now becoming the largest producer of oil in the world?
First of all, in terms of oil, US shale oil investment decisions are largely based on commercial decisions. Having said that, a lot of oil, shale oil coming from United States is a good news for the entire world because there are more than few suppliers now. We don't need to, India, China and the others don't need to put all the eggs in the same basket. So this is a good news. But one, looking at more generally the geopolitics of energy, the shale, both oil and gas, there's a huge still growth potential. We have only seen the beginning of the movie. More to come. So I expect that this will have major implications for the energy markets, for economy, and also geopolitics of energy. It is not only oil, but also for natural gas. I believe in general this is good news for the energy security and also for the importing countries, so that there are not only a very few big suppliers, traditional suppliers, but there are new suppliers that are coming. I mentioned US, but Canada, Australia, they are also coming in the picture.
Okay, fair enough. I normally, when we speak to you here at the WEF, I ask you about this, the year that's to come. I'm going to ask you to wear your 10-year hat and tell me, what is the energy market looking like 10 years from now? The major contributors from the country's point of view, as well as from between the renewable and non-renewable mix point of view.
So we will still see lots of oil and gas, but the penetration of renewables, especially solar power, but also wind and bioenergy will play a more important role in the future because they are becoming cheaper and cheaper, and I expect that many countries will use renewables more, and people will also look at the sustainable ways of using energy. Private cars, yes, but also public transportation. For example, at the end of this month, 30th of January, I am coming to New Delhi to release international release of a major report of the year on the railways, together with Minister Piyush Goyal, to highlight why railways are important in general for the world as a transportation means, and also using energy much more wisely, which India has huge plans and also huge expectations. We will be talking about that in New Delhi on 30th of January this year.
And in terms of country contributors, OPEC is now down to about 50% of the world's oil share. How do you see the geographical contribution panning out 10 years from now?
I think the role of the United States will increase, but we shouldn't forget one thing. So we are not out of the geopolitics of energy. US will produce a lot of oil, but most of this oil US produces are used within the United States, therefore domestic consumption. Middle East will remain the most important exporting region, especially Saudi Arabia will remain the most important exporting country. 10 years, 15 years from now. So with seeing some electric cars here and there, some windmills, to say that era of oil and gas is over is oversimplification.
All right, we'll leave it there. Dr. Burrell, thank you very much for speaking to us, as always, here at the WEF, and have a great rest of the week.
You too. Thank you very much.
Thank you. With that, it's all we have for you right now, but stay tuned for a whole host of interviews coming up for you on Bloomberg Quint Live, right here from the World Economic Forum's Day 1.
Well, thanks for that, Menka. We're talking to Fatih Birol and clearly believing that oil producers are under a bit of, or oil investors are maybe under a bit of cloud, but not doomed. That seemed to be his key message as he spoke to Menka. Okay, speaking of oil, I think those oil sensitives today are doing rather well for themselves. BP, HPRC, etc. are all doing rather well. Before we continue our discussion with Dipan Mehta, let's take it back to our technical experts and try and see what they are recommending onto this space. So, Sacchitanand, if I can come to you, the oil marketing companies in the session today, do they give any inkling of a trade, or would you just leave them alone?
Well, I would rather, consider the bounce backs that we have seen as a shorting opportunity, especially when we look at the structure of IOC. The stock looks on a weakening trend. So overall, I think the stock will gain strength only once it starts, trading above say 142 zone from here on. So until then, I think it's a very good shorting candidate. A stop loss should be placed somewhere close to 141. And I think this up move that we have seen, I think it will be a good shorting opportunity. We are expecting that the stock should revisit the lows of around 125 very soon. So it's it's a sell on rise kind of a candidate for me unless 140 barrier is held on.
Okay, and Amar, Interglobe Aviation is up almost 6% today. What do the charts suggest?
Yeah, looking at Indigo, what we see is that on the daily charts, it has been consolidating. It has found strong support around 1050 odd levels. Whereas on the upside, again, 1150, that's a level of resistance. Technically speaking, I would say on the weekly charts, the stock remains positive. However, on the long-term charts, the stock is clearly indicating some consolidation and sideways trading. So till the time the stock doesn't take out the 1150, 1160 zone, it could trade sideways, because taking that out will only lead to some meaningful rally towards the 1200 mark.
Okay. Mindtree also is doing well for itself today, about 5% higher. That's at 925, and it's been a gradual climb. Last few minutes have just added up, amplified those gains that we saw in the morning. So good going there for Mindtree. 3.4 million shares traded. Yesterday's session started off positive, but then couldn't keep up. With news of L&T Infotech picking up stake. 925 is where it's trading. And Dipan, are you tracking mid-cap IT and anything on Mindtree?
So I think mid-cap IT has generally become quite volatile when it comes to their financial performance, and it's very difficult to get a handle on which companies will in fact deliver good set of performance and which will not. We have seen many quarters, some company comes with good results and then there's a disappointment, and the opposite also happening. But by and large, I think mid-cap IT should do better than large-cap IT. Just there is a challenge to find the right winners within that segment. Now, Mindtree has come out with a good set of numbers, but then they had a string of disappointments in earlier quarters. Again, next 1-2 quarters may do well, and you may have disappointments again. But over a longer period of time, I think that IT company growth rates would be, mid-cap IT would be growth rates would be higher than large-cap IT, purely because of the base effect. And many mid-cap ITs are getting into specialization and super specialization, whereby their business models become far more interesting. So we feel that with usual disclosure, investors could look at getting into companies like which we feel have a differentiated business model, companies such as KPIT or L&T Technology Services, or even Tata Elxsi for that matter. So that's where our focus is. And then there are product companies like Intellect Design or Majesco, which have a non-linear growth model, and if you are sufficiently patient in these companies, you could reap huge rewards going forward. So the underlying conclusion is be selective and look for companies which have got a slightly differentiated business model or are very specialized in their offerings.
Dipan, what are the timelines that you're talking about when you speak about these product companies? I know it can be non-linear and could be a surprise at any given quarter, but still, I mean, is there a bare minimum timeline that people should have in mind when they are looking at these names?
See, I think we normally have a time horizon of 3 years, but look at the company's performance every quarter and look for any signs where we may have made a mistake in analyzing the company or its future outlook every time the quarterly numbers are out and management commentary or management discussion takes place over con calls. So, mid-cap IT is not something you can buy and sleep on it for 2-3 years and expect that it will do very well. Those days are gone as far as the entire IT industry is concerned. So you need to be a bit more vigilant as far as these companies are concerned. But yes, I think there is money to be made. There are trading opportunities and investment opportunities within the entire IT pack.
What?
All right. I think we have to go back to Davos because we are getting important and prominent voices from there. We've got Menka Doshi. She's in conversation with Puneet Dalmia. Let's listen into that conversation. All right, I think we'll try and patch that interview once we can. But in the meantime, let's go across to what dealing rooms are talking about this afternoon. Darshan and Yathin, both of them joining in right now. Darshan, let's start off with you.
Yeah, so the important number that came out today was Asian Paints, and that's something that dealers are talking about. Asian Paints came... Yeah. I think this is so. Asian Paints came out with a strong set of numbers. I think they don't disclose the volume growth number that came out. They've said high double-digit growth. Spoke to a few of the analysts, to some people in the company, and what they're saying is that the volume growth probably is close to 20% or exceeding 20%. The estimate was almost 11 to 12%. So there is more traction that could come in on Asian Paints, is something that's been spoken about. The other counter which is done well is Strides. Strides is up almost 6%. A large foreign fund has been buying Strides today. Very decent volumes, over 3 million shares have already been traded, and ITC will report numbers tomorrow. The anticipation is ITC will report very strong set of numbers, so that's been spoken about. Yathin, what do you have?
Well, if you look at Maruti Suzuki, that is one stock which has corrected quite steeply in the last few trading sessions, but at current levels, dealers are expecting that there could be some bounce back in the auto name. 2% down for that one, but at lower levels, dealers are accumulating the stock of Maruti Suzuki. Havells is another stock which came out with stellar set of quarterly earnings, and dealers on the basis of F&O trends do expect the uptrend to continue in tomorrow's trade as well, so watch out for Havells as well. And finally, Mindtree, that is one counter which has seen a lot of short covering. In fact, today a lot of HNIs are buying the shares of Mindtree on the expectation that this short covering rally could last a couple of days. So this is another stock which is on the buy radar for the dealing rooms today.
Okay, got that, Yathin. Thanks very much for that. That's a quick dealing room check this afternoon. Dipan, while we are on the topic of earnings, did you happen to look at the earnings of TVS Motors, and not just TVS Motors, but what is the expectation now out of the larger auto players?
See, I think larger auto players will disappoint. TVS Motor really has surprised, and actually we are now going to look at the numbers more closely and understand what the management has spoken. I think clearly the results are an outlier as to what one should expect in the auto industry, and could be very interesting from a long-term perspective of investing in the stock. It anyway has been one of the business model has been very different compared to other auto or two-wheeler companies, where it is present across the entire spectrum of the two-wheeler industry. Very strong presence in South and a good export opportunities as well. Only issue with the TVS Motor is its low operating profit margins compared to other two-wheeler players. And if there is some changes happening over there, I think one needs to be look at it quite closely and monitor it. So I think it's an interesting number, the most interesting that we have seen so far, and one needs to study it more closely. It could be the beginning of at least some sort of a change, positive change happening in the company, which could take the stock price trajectory much higher.
Wow, that's an interesting thought. And maybe some food for thought for anybody who's looking at TVS Motors. Dipan believes that one should study it more closely because this could mark the beginning of a change in trend as well, earnings trend, not just the stock price trend really. Dipan, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time and your comments on this TVS Motors, on mid-cap IT and a few others. Before we start wrapping up the markets, closing strategies from both our technical experts. Quick thoughts out here. Sacchitanand, your top call.
Well, in fact, I was going to comment on TVS Motors itself. The way it has reacted, I think it's a new impulse which is already commenced. A stop loss should be placed somewhere close to 542, and we're expecting that this move can extend right up to 580, 585 from a trading perspective.
Okay. What about you, Amar Singh?
Yeah, one can look at Dr. Reddy's. And Dr. Reddy's is, if you look at the stock particularly, it has moved up, and it is breaking out of a consolidation. Because 2620, 2630, that was acting as a key resistance. So that has been taken out, and the stock is currently trading around 2640. So this is one stock one can look at. Any pullback towards 2625, 2630 can be used to initiate a long position with a stop loss below 2600, a target of 2710 on the upside.
Okay. Just a quick thought on Thermax, if we can. Sacchitanand, I'll come to you. A spike in the last half an hour.
Well, I think the stock has been consolidating. In fact, it has maintained its tail very well near to its 200 exponential moving average, placed around 1060, and the rebound seems good if you compare it with last few days volumes. I think the critical level out here is 1125, and once we see this particular level get reached, I think the move can extend right up to say 1200 odd levels. So I think it's a very good buying candidate. I think 1070 should hold on this time.
Okay, stay on, gentlemen. We'll start wrapping up the markets and then come back to you for a final comment. But the close, not bad. It's we are not closing at the lowest point of the day if there's any consolation, but it's a very lackluster kind of trade, at least at the broader end of the spectrum. The Nifty 50 could still have held out a little bit better, but the market breadth was very, very tepid. The mid-cap and the small-cap indices will show you why the market breadth was tepid, because it was a similar kind of a move on the indices itself, about 0.25% lower, and the mid-cap index very flat. So interesting that yesterday these indices were down a lot more, but the breadth was maybe a bit better than what's the trade yesterday. So, well, curious moves. Devina will highlight all of that as to what's happened at the broader end of the spectrum. Let me talk about the large caps and what's moved and what's not. So amongst the gainers, Sun Pharma gaining some steam after the development today, so good move there. Wipro about 3% higher. Titan has gained about 2.5 or 2% in trade. Kotak Bank continues on its merry ways. Hero MotoCorp about 1% higher in trade today, good going. Bajaj Finance about 1% higher. Yes Bank, interesting move intraday in the green after starting off in the red. What didn't do well, metals. So Vedanta, Tata Steel, JSW Steel all succumbing to selling. M&M, Maruti, Tata Motors, etc. So metals and autos had a terrible day today. IT had a mixed bag. HCL Tech and the others didn't do well, whereas we had some winners as well. So mixed bag really for the IT space. But the market breadth very, very poor. And Devina, it showed in the way some of the stocks reacted.
Yeah, that's the mid caps and the small cap pretty much in line with what the benchmark indices have done, so have lost closer to about 0.25% apiece. Individual numbers and individual stock specific action is what we need to focus on in today's session. So we'll start off first with the stock in focus the entire day, which has been Prabhat Dairy. The stock finally going to shut shop with closer to 15% losses, which is a 35% intraday move that the stock is seeing this time around. Deepak Fertilizers, the other one that is going to be ending the day with heavy losses of about 6.5%. ITI, the big boost that it got yesterday from that order win, double-digit gains. The stock today gives back a bit, so about 5.7% of the cuts coming in. Vakrangi, lower circuit on this one. It opened lower, and that's where it's probably going to end the day. Zensar Technologies, disappointing Q3 performance. Revenue numbers were good, but pressure on profitability as well as margins dropping the stock 5.5%. bit lower. JSPL, Praj Industries, 5th straight day of cuts coming in on the counter after a stellar run since mid-December. So you're going to see some pressure building up there, 4.5% under. Srei Infra is the other one that loses out in trade. Amongst the key gainers, you've got an Indigo or an Interglobe Aviation, which does really well, about 5.5%, and a gradual slope up. So good momentum build up, good accumulation, volume picking up, and that's a strong, stable move through the day. Mindtree does well. Hexaware from the mid-cap IT pack continues to gain. Future Retail strides to soon, Havells on the back of numbers, and so does TVS Motors on the back of its Q3 performance. Both these counters have done extremely well by about 3.5% for TVS Motors. But that's what the market looks like this afternoon. Softer on the large cap names, but I guess we've taken a breather.
Yeah, that probably is the name of the game, even though the market breadth looked a lot more terrible than just looking like a breather. But the headline numbers certainly pointing towards that. That's the market breadth, not too good, but the headline numbers certainly pointing towards we taking a bit of a breather in the session today, both the large caps as well as the mid caps.
Let's take a look at the volume picture and see how the turnover has shaped up this afternoon. 31,000 crores on the cash side, so that is higher than yesterday's 28,000. So the cash market activity has been picking up. Futures and options pretty much average, about 5.5 lakh odd crores on the F&O side. The BSE cash was also picked up, 3,100. Average that we've seen is closer to 2,600, 2,700.
Yeah, so for 500 crores higher. The contributors list should be interesting today because Reliance might be absent. And yes, it is. It's not there in the top gainers or the top losers. Fairly lackluster. But for Kotak and Sun Pharma, nothing quite that strong which has made its presence felt. And
HDFC Bank has flipped sides from yesterday. So the losses coming in from that counter. Maruti M&M Auto as a pocket looking weak. A marginal contribution. Wipro was one of the bigger losers yesterday, and that's turned the corner too. Yeah, so interesting day of trade. Let's see how the day shapes up for the next few. Jaman, final thoughts from you. The Nifty Bank not quite succumbing to pressure, nor does the Nifty IT. So the two heavyweight indices continue to stay afloat. What does this signal, if anything, for what the index does tomorrow? Amar, let's start off with you this time.
I would say that Nifty Bank, particularly if I look at Nifty Bank, it's clearly showing that upside is meeting with stiff resistance, and that level is somewhere around 27,650, 27,750. And currently it's around 27,500, approximately those levels. And technically also, if you look at it, it is in consolidation for the last almost 5-6 trading sessions. So I would say that it's going to trade sideways on the downside. Yes, strong support comes at around 27,150, 200 levels. So it's more or less this range play, only a decisive trade and close about 27,700, 750 levels. And sustenance above that could lead to some meaningful rally, or otherwise again we could witness some choppy trading sessions tomorrow.
Sacchitanand, your closing comments?
Well, I think, Bank Nifty, as we said, we are optimistic on this particular move. In fact, the consolidation looks healthy. In fact, we are expecting that the move can extend right up to, say, 27,700 very soon. But when you look at the structure of Nifty IT, I think, yesterday we saw a spinning top kind of a formation near its resistance zone of 15,100. And this particular low was again challenged today. So it will be very interesting to see how 14,800 is, managed in next couple of trading sessions. In case if we see a closing below the same, I think then the IT stocks may start disappointing. But so far so good. I think the overall health of the indices look better. The way ITC has rebounded, and we have the earnings tomorrow. So probably it may provide the required stimulus for the Nifty to reach about 10,950.
Got that. Gentlemen, we'll leave it at that. Thanks so very much for joining in this afternoon. Amar as well as Sacchitanand, thanks a lot for the time. Well, with that, it's a wrap on this edition of Countdown from Neeraj, myself and the entire team that's put the show together. Thanks a lot for watching.